In today's weekly Forex forecast, we'll break down the most important supply and demand zones, trend lines, and the setups I'll be looking to trade next week. Let's get right into it. Starting off with the DXY, the US dollar index. So reminder, we just broke this high recently a couple weeks ago. We have a beautiful weekly trend line. So overall, I am definitely bullish on the US dollar long term. If we throw a channel tool on this trend line, you can see we are not super overextended. We're sitting right at the 50% mark, but we are expecting price to maybe fall a little bit towards the trend line to maybe refuel to push up to our weekly supply zone at 103.06. That is where I think we are ultimately headed here on the DXY, the daily time frame here. It shows just how overextended we got, and we are clearly getting a pullback as expected. I've been talking about that in my weekly Forex forecasts. We are sitting kind of just below the 50% mark, but we easily could be falling a little bit more. And the reason I think we could continue to fall is because on the 4-hour time frame, we have a very nice 4-hour trend line to the downside. As we got closer to this trend line, we really started to fall again. And what I think we could be seeing the next couple weeks is maybe a pullback down to this demand at 137, maybe see a move off of that zone. And if not, there's a zone down even lower at 99.74. Ultimately, if we do pull back to these zones, I'm expecting one of these zones to hold and to push up to continue to go up to the weekly supply that we were just referring to. Moving on to the forecast for the Euro US dollar. So we just recently targeted weekly liquidity. We also have a weekly area of liquidity down below with a weekly demand. It's just the inverse of the DXY. With this weekly downtrend, we could expect to see the euro to actually continue to fall long term. It doesn't mean that we won't be looking for long trades. We always trade counter trend. It's just all about trade management. On the daily time frame here, you can see daily downward trend line. A little bit extended here. Even if we do pull up, we have a supply zone that we easily could see a move off of on the daily time frame. That'll be a great area to look for swing trading shorts. We have a couple of options for trading the euro right now. Right now, we have a trend line drawn from here to here. That is our trend line. This is a reaction off of our 4-hour trend line. This is another reaction off of our 4-hour trend line. It's not looking great. It looks like it could actually break. If it continues to hold, as long as it's holding, you could be looking for longs on a 15-minute time frame. If we break the trend line, that's okay, because we do have a 1-hour area of demand sitting down below. It's definitely not my favorite kind of zone. It's somewhat decent. The move away is pretty good. Basing, not my favorite. But if you are bullish on the euro, that is our demand zone for a pullback entry long at 113. I would be somewhat aggressive with trade management though, because it's not my favorite zone. Don't know how big of a move we are going to get. So if you want to trade the zone, don't get greedy. We don't have to look for a massive trade. I'd be aggressive with trade management. Moving on to the forecast for gold. So you can see recently we just broke this low. Definitely a bearish sign on gold. And I think what that is signaling is that we're going to be pulling back down to this monthly demand. This is a weekly time frame, but these black dotted lines is a monthly demand. This is going to be a great dip buying opportunity for gold. And I know a lot of you guys are traders, but if you're investors, it's a great area to look for a pullback entry to start investing in physical gold or even ETFs. So you have to look into it more in depth. Not going to talk about it here. On the daily time frame, looking very similar to the euro. Daily downward trend line being respected. We are quite overextended, so we could expect to see gold pull back up maybe to this daily supply where we can get some potential swing trading short opportunities inside of that daily area of supply. It was a nice trade off of this 4-hour area of supply. What a trading setup. The move away was very good. And this is the power of risk reward, right? That was a loss. This was a win. Depending on where your risk reward is, maybe you're up 1% after both of these trades. And that's fantastic. This trade was called out for the Diamond members in the daily market breakdown video, which is a forecast I release every single day during the week for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand, demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions. And finally, the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately. Absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this trade pretty much has played out. It looks like we will be retracing back to the upside because like I said, we are somewhat overextended on the daily chart. So as far as trading the 4-hour chart goes now, I'm not seeing anything. However, if we remove this supply, since it's a very proven area of supply, as in we've already seen a move off of it, clearly there was some sort of supply here. So if you remove that supply, any demand zone there is going to be a pretty nice long opportunity on gold. We have one other option for trading gold. If you notice, we had a 1-hour downward trend line. That trend line was removed by this area of demand down at the very low at 40.40. It's a mediocre zone at best. The move away is decent, not great. So if you're bullish on gold, and what I like about the zone is that we have a clear area of liquidity here, which is a support level. I would like to see another reaction off of this support level, telling me that there are most likely retail stop losses here, and that's going to be our pullback entry for a long trade at 40.40. So that's our buying opportunity on gold right now. Hopefully it all makes sense. Moving on to the forecast for the S&P 500, beautiful weekly trend line to the upside. However, on the daily time frame, the last couple of weeks, we are obviously the overall trend is still up, but we are clearly going sideways here. However, if you look, we are very close to pushing to the all-time high. If we do, we will have a great trend line here that will be very, very sustainable. So I'm looking forward to see a potential break to the upside here on the S&P 500. What a trade from our 4-hour area of demand called out in my weekly Forex forecast here, the ones that you are watching for free for you guys here on YouTube. So if that's not a reason to hit that subscribe button, if you want to follow my channel, follow my forecast, follow my tip videos, I don't just post hindsight P&L. I am calling these trades out before they take place with video evidence, everybody, video evidence, not just posting P&L, which can be easily faked. So hit that subscribe button. If you're enjoying this video, hit that like button as well. Beautiful trade from this zone. Unfortunately, I'll show you guys how I manage this trade on the 1-hour chart. I am not in this trade anymore. Wish I was, but I'm fine with my decision. I'll break it down when we go to the 1-hour chart, how I manage this trade. Right now, not really seeing any good zones, if I'm being honest. However, we have a very nice 4-hour trend line to the upside. So basically, as we push to the all-time highs, this trend line will be our guide for 15-minute time frame longs. As long as this trend line's holding, I think looking for a 15-minute time frame or even 5-minute time frame longs definitely going to be the preferred situation. The 50% mark of the trend line or the channel is here. We are sitting above it right now. So I would prefer a push below the 50% mark. And as long as price is above the trend line and below the 50% mark, that's where it's going to be the sweet spot for the 15-minute time frame longs. So maybe just be a little bit patient here, wait for somewhat of a pullback, and that's really the only setup I'm seeing right now in the S&P 500. So I'm just going to show you how I manage that trade quick. A little bit of a lesson here. I know it's a forecast, but we will do a little bit of a lesson. So I was in that 4-hour demand zone trade. Very happy with how it was going. We broke this trend line. I didn't want to get out yet. I was basically trying to ride this trend line, and I was fine with getting out as long as if the trend line broke. But we made a very clear low here, and I thought maybe it was a fake out. And I mean, it kind of was. Because I mean we ended up going up to the upside, but I basically put my stop under that low to potentially allow the fake out to take place, and I was going to keep moving my stop loss up. So I was stopped out of this trade right here for a profit, but it was a nice trade nonetheless off that 4-hour area of demand. Hoping we get some new setups this week, but for now, that's our 4-hour trend line guide for longs on a day trading time frame. Moving on to the forecast for the USDJPY, beautiful weekly trend line to the upside here. Channel tool we will throw on to see if we are overextended or not. And I would say we are not. We are actually sitting below the 50% mark of the channel. So it's a decent time to actually look for longs on the USDJPY. The issue with this chart is I just haven't been identifying any decent trading setups. The only zone I'm seeing is this 4-hour zone down below. It is mediocre. I mean, it looks we got so overextended here that it does look better when price was over here like this. the move away looks better depending on your zoom. What I like about this setup is that we had a clear area of potential liquidity down here. So I don't really love this zone. However, if we can get a reaction off of this support area, that will show me there are most likely stop losses here. And then at that point, I like that setup for a long trade. The issue with the zone is that it's kind of old. So at that point, if you want to get in long off the zone, you can. I would just be aggressive with trade management off of that 4-hour area of demand. The other option here, actually, as I'm talking, we only have 1 minute left before this candle to close, and it looks like this trend line has been breaking. And I wasn't surprised. Basically, before I started this forecast, my plan was to talk about how if this trend line's holding, you could look for 5-minute time frame shorts, but I was going to warn everybody, it's a very steep and aggressive and mediocre trend line. It's not like super sustainable like this. It's a very quick and aggressive trend line. So I was going to say we have to be careful with it. It's more likely than not that this trend line is going to break. So I'm not seeing any setups. We have 1 minute left for this candle to close. And if it does close here, this trend line will break. Most likely is going to break. So at this point, I'm not seeing anything on the yen except for that 4-hour demand zone down below. But we kind of have to wait to see if we can get some sort of liquidity trap setting up down below. All right, moving on to the forecast for the GBPUSD. You can see we had a pretty nice daily downward trend line here. That was very easily removed. So that's definitely a bullish sign. So one reason, I'll show you how I manage this trade. The fact that we broke this downward trend line made me aggressive with this trade. I will break down for you guys right now. So we had a supply zone for back here. Very good zone, as good as it's going to get, really. The basing's clean. The move away is fantastic. It's literally a 10 out of 10 zone. The only issue with it is look how old the zone was. However, we got a liquidity trap before the zone. You can see my purple box, clear area of resistance. Stop losses are all here, right into our supply zone. What a trade from that area of supply, called out before for the Diamond members as well. But this was a break-even trade for me, as you can see. And why was I break-even on this trade? A couple of reasons. Again, the daily downward trend line I was talking about, it just was removed. So the daily turned sideways for me, which makes me want to be more aggressive with trade management. That's number one. The daily downward trend line was removed. Number two, why I was aggressive with trade management is because it was an old zone. So the zone was old. That's why I wanted to be aggressive with trade management. And that's pretty much it. Those are the reasons I was aggressive with trade management. Why I broke even on this trade and I didn't get, and I wasn't in any profit here, was because basically the trade triggered the night before. I woke up and price was sitting right about here. I forget exactly where, but it was somewhere down there. I was planning on just looking to take profit at 1-to-1, keep upping my stop loss up. I probably would have locked in a 1-to-1 on this trade if I didn't do what I did. I'm actually happy with the way I managed this trade. I saw in the middle of the night, price came all the way up, almost broke the zone. So when I woke up to price down here, I'm like, you know what? I'm just going to, I already wanted to be aggressive with trade management anyways, put my stop to break even. We came back, hit my break even stop, and we fell, and my take profit would have been hit. Might even have made more than a 1-to-1 depending on how my trade management went. And that was a bummer. I was upset for like 2 minutes. I was like, oh man, that sucks. Especially the next day when price fell even further. I was upset for a couple of minutes. I didn't let it bother me. I didn't let it linger. And that's all part of trading psychology, everybody. Just did a new podcast on my YouTube channel, the Stoic Trading Psychology Podcast. Check it out. Hit the subscribe button on that channel. If you can't deal with situations like this the way I did, you will never be able to make it in trading. So you have to watch my podcast to try to master your skills. Watch my videos on FX Telepath to learn how to trade, follow my forecasts, and then listen to my podcast. Watch my podcast, Stoic Trading Psychology Podcast, to master the psychology aspect of trading as well. Super important. I was bummed out for a couple of minutes, completely over it, moved on to the next trade. It is what it is. As far as trading the pound goes now, we had a nice 1-hour trend line to the upside. That was removed, and that's fine. I'm not bummed out about it being removed. It's okay. We have a nice demand zone down below. It's pretty decent at 133. If you're bullish on the pound, that is our demand zone entry for a long trade. If we remove the demand zone, any supply will be our trade to the downside for a shorting opportunity. And on the 4-hour time frame, you can see we have a very nice 4-hour trend line to the upside. It's pretty nice. Let's throw a channel tool on it to see if we are overextended or not. Let's take a look. We are actually not. We are in a great spot. We're in the sweet spot below the 50% mark, above the trend line. As long as that's holding, 15-minute time frame longs are going to be good on the British pound. All right, moving on to the forecast for the USDCAD. I am from Canada, grew up in Canada, born in Canada. Let me know where you guys are from and born in the comments down below. Always like to see where you guys are from, and maybe some of you guys can connect with each other if you guys are close. So I'm excited about the USDCAD. We removed the weekly supply. We got left with a weekly demand at 140. It's a mediocre zone. I will say it's not the best, but it'll be a great swing trading opportunity to look for confirmation trades inside of that weekly zone. What I also like about it is inside of that weekly zone, we also have this daily zone at 140. So I'll be pretty much framing it in this daily zone, looking for H1 trades to the long side. So right now I am just practicing patience, which is another part of trading, waiting for price to pull back to the higher time frame zones. That is what I'll be looking for. And then on the 4-hour chart, we actually have a decent set and forget trade. This 4-hour zone is right at the weekly and daily zone. So it's kind of like level inside of level inside of level. I would have somewhat of a wider stop on here to give it more wiggle room, since we do have a higher time frame zone in play at this level. So that is our set and forget trade at 140. Let's say the zone fails and we take a loss. That's fine. We will still be looking to trade by getting confirmation. So it could be one of those times where you take a set and forget trade, you lose, we get a confirmation trade, we win. That's what I'll be looking for. Nice potential set and forget trade down at that 4-hour area of demand. As far as trading the USDCAD goes right now, we have a 1-hour trend line to the downside. If you are bearish and you day trade, 5-minute time frame shorts are good as long as this 1-hour trend line is being respected. If we remove the trend line, any demand zone there is going to be our long opportunity. All right, looking at the forecast for the Aussie US dollar, we had this weekly area of support. I don't trade support, I trade demand. That's our demand zone down below. Nonetheless, we are clearly seeing a reaction off of this area of support, which means it's going to be a good area for support and resistance traders, meaning their stop losses will most likely be somewhere down here below that low. So at this point, I think the best opportunity is to wait for the weekly demand, and we'll be patient. Obviously, there will be other trading setups, but this is ultimately, I think, the move we could see on the Aussie US dollar as far as the weekly time frame goes. As far as trading the Aussie US dollar goes right now, we actually have quite a bit of options. You can see we have a supply zone above at 0.705 and one even higher at 0.712. So these are our areas of supply for shorting. Nice supplies on there, nice supplies on there. Could take both trades. I would be less aggressive with the trade above. It's just at a better price. So you could be more aggressive with this supply zone trade, and then maybe book a 1-to-1. And if we push up to that supply, that will be our supply zone trade that we could see a bigger move off of. I didn't even notice, so I'm going to draw it now. We have a 4-hour trend line to the upside. It's actually pretty decent. So if you are a day trader, you're in luck. We have a nice 4-hour trend line. We're at a decent point. As long as this trend line's holding, 15-minute time frame longs are going to be good. So copy this trend line on your charts, right? I'm doing these forecasts for free. Might as well copy them on your charts. We have a couple of options for long trades here as well. We have 2 zones. It's a dilemma for a lot of people. It's a question I get a lot. What do we do when there's 2 zones? Well, first of all, this is the much better zone. The move away is fantastic. This zone is decent as well. Why I like this zone better is 2 reasons. Number 1, it's a better price. It's cheaper. If you just think about it, like pretend this is your favorite ice cream. Why buy it at this price if it's going to go on sale next week for this price and you know it, right? So what you could do is buy 1 tub here if you run out, and you buy and you load up down below. So the way we would, kind of transfer that ideology to trading would be, if you want to trade both zones, because maybe something like this happens, boom. And you don't want to miss on that, and maybe you don't want to just be patient, wait for the zone lower, and you want to get involved in this trade. How I would do that is, if you're going to trade at this zone, you want to be aggressive with trade management, 1-to-1. The second reason I think that this zone is better is because we have this zone is clearly a part of this potential support liquidity, which is why I think we could see a move off of it, maybe only a small one. So if you're going to trade at this zone, I'd be aggressive with trade management. Look for a 1-to-1 trade. Bump your stop loss to breaking as soon as you can. Stops into profit. If we get a move in our direction, it's fine. We could be aggressive with trade management off of that zone. The bigger move, I think, will happen off of the zone lower. I don't think it's going to be a massive move, but I think we can justify being less aggressive with this trade for trade management. So I'd be aggressive with trade management off this 1-hour zone, less aggressive with the zone down below. Nonetheless, 2 decent zones for buying opportunities on the Aussie US dollar. Moving on to the forecast for the USD Swiss. Beautiful weekly trend line to the upside. We are pretty overextended though, as we are sitting pretty much at the high of that channel. So we could expect to see somewhat of a pullback just based on being too overextended. We have a daily demand down below. If we do pull back, I think that's where we most likely will pause and maybe see a rally to the upside. As far as trading it goes, it's all really going to revolve around this 4-hour chart. I talked about this last week. We have 3 areas of demand here. Very, very tricky situation. We also have a 4-hour trend line. It is drawn from here to here. This is a reaction off of our properly drawn trend line. These ain't there's no Tory trades kind of trend lines here. These are legitimate trend lines that we see reactions off of all of the time with rules behind them. Okay, a little bit of a jab there. I don't care. As far as trading it goes now, we have a couple of options really. As long as this trend line is continuing to hold, I mean, we already saw a nice reaction off of it, so a third touch, we actually could see it break. But as long as it continues to hold, 15-minute time frame shorts are going to be good. And what I mean by that is however you trade, whether you trade supply and demand, support resistance, chart patterns, whatever, as long as it's holding, 15-minute time frame shorts are good with using whatever strategy you guys like to trade. We have a couple of options here. So we have zone number 1. It is decent. It's kind of a liquidity trap. So if we get a pullback to that zone, I think we could see a move off of it to the upside. I would be aggressive with trade management because the better zones are sitting down below. So I think we could see a nice 1-to-1 move off of the zone. Stops to break even, stops into profit would make sense. Why I like this zone the best is because this zone on the 4-hour chart is embedded inside of that daily demand that I was showing you guys before I switched to the 4-hour chart. So I think the bigger move could actually happen off of this 4-hour zone. I think we could see quite a big move. So this, I think, is going to be the moneymaker down below, but it doesn't mean we can't make a little bit of money on the trade before it. And if both of these zones fail, we have a pretty good area of demand down below all of this liquidity. The issue is it's not inside of a higher time frame zone. So again, we could literally take 2 losses here. You're down 2%, get a beautiful trade off that zone. Now you're up 2%, 3%, even after 2 losses, if we get a nice trade off of that zone. So 3 good zones here. Either pick one or do what I'm talking about with the trade management. All right, moving on to crude oil. I am so happy to see oil tanking. I hope it continues to fall. Ultimately, I think where we are headed on crude oil is, one second, down to this weekly demand down below. It's an older zone. I've been pointing it out the entire time. However, we are at a weekly zone right now, and we are clearly seeing a reaction off of it right now at 68.49. I think it'll be a smaller move. I think the bigger move will happen off of the zone down below. Nonetheless, with a weekly demand and control, we were looking for long opportunities. Unfortunately, didn't get a whole lot. If you notice, I have a green zone down below and a black zone. What's the difference? Well, this is almost very good. The issue is it didn't remove anything as far as my chain analysis goes. The Diamond members will know exactly what I'm talking about. We go over in the Sunday meetings. So I just drew it for the members in the Daily Market Breakdown video on Thursday, I believe, or Wednesday, I kind of forget. And what a trade from that zone. A quick one, but like I've been saying, you can go back and watch all my previous forecasts. I've been saying however you're trading on oil, long or short, we want to be aggressive with trade management. I personally avoided the zone because it didn't fall in line with my rules with my trade management, but I thought it was a higher odds situation that we would see a move off of the zone. So let's say you had a 1-to-1 take profit, it was hit. If you had a 2-to-1 take profit, it was hit as well. So what a trade, quick trade. Nonetheless, beautiful trade off that zone. At this point, our real confirmation is down below at this 1-hour area of demand at 69.85. So if we do get a pullback, that is our zone that removed a trend line. I definitely think we could see a move off of the zone, but just like we did with that zone up here, we're going to be aggressive with trade management off of that demand zone as well. Moving on to the forecast for Bitcoin. Last but certainly not least, we removed the daily downward trend line. Not surprised, it was quite aggressive. We have that daily supply above. I think that's where we are most likely headed. Supply and demand zones kind of act as magnets for price. That's where I think we could be headed, and that's where I think we could see a fall to the downside. So we have tons of profit margin to the upside, but we have to be careful getting in long because we have a weekly downward trend. So really, we are trading counter trend. The good news is that we've seen such a deep pullback kind of inside of a monthly demand. So that's something we have going with us if you want to get in long. It's kind of a tricky situation. As far as trading Bitcoin goes now, I don't see anything, unfortunately. There's something down below. I just noticed now. So we have no 4-hour trend line. We are waiting for this high to be removed. I know it looks like it's close. It did not get removed. If it does get removed, that high, we will have a trend line here. And that trend line will be our guide for 15-minute time frame day trading longs. So that's what we will be looking for if you want to get in long on Bitcoin. There is a demand down below I did not realize. The move away is mediocre. The zone itself is very mediocre. So if we're going to trade at the zone, I'd be aggressive with trade management. And I'm not a day trader, but if I was, I wouldn't be taking the entire zone. I would just be waiting for the zone to be hit, and then I would switch to a 15-minute day trading time frame and look for confirmation coming off of that 4-hour area of demand. I think that is the highest odds situation right now on Bitcoin. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.